Lululemon stock is struggling in 2025, which has investors looking ahead to 2026 and are asking me, where do I think Lululemon stock price will be by the end of next year? That's the question I'm going to answer in this video and share with you precisely how I'm making this stock price prediction or stock price target. Follow along and let's see. So in order to make this stock price prediction for Lululemon, I need to use several estimates and assumptions, and that's where the sponsor of this video comes in. Fiscal.ai provides useful charts like the forward price to earnings ratio, which I need to make stock price predictions and other analysis for the companies that I'm following. Lululemon right now is trading at a forward PE of 14.12. So Fiscal.ai provides cool charts like this and others. So if you're interested in their services, there's a link in the description. And if you use my affiliate link, you'll get a discount to your Fiscal.ai subscription. So another one of the estimates and numbers I'm going to need to make my stock price prediction is Lululemon's fiscal year that ends in January 2028 earnings per share estimate. So the Wall Street analysts that are following Lululemon stock, they make their estimates for what they believe the company will deliver in earnings per share, looking ahead several years. And Fiscal.ai aggregates that information, which saves me a lot of time bringing this together. So the reason why I'm looking at the fiscal year that ends in January in 2028 is because I'm using the forward 1 year price to earnings ratio. And so when I'm using the 1 year ahead, I need to get the earnings per share estimate 1 year ahead. And Fiscal.ai has this information ready and available for me to utilize. So now that I have the information I need and the numbers I need, I can go ahead and model out several scenarios that I think are the most likely scenarios for Lululemon stock in 2026. So if the company is on track to deliver the $14.23 in earnings per share for calendar year 2027, I know it's fiscal year 2028 for Lululemon because it ends in January of 2028. I know it's confusing when companies have fiscal years that are different than the calendar years, but you've got to complain to somebody else besides me about that. I don't have any control over that. The U.S. accounting system allows for companies to have fiscal years that are different than calendar years. If it was up to me, I would do away with that and have everyone standardize calendar years and fiscal years. Anyhow, so if the company is on track to deliver $14.23 in earnings per share and its forward PE multiple remains at 14.12, then the share price could end by the end of 2026 at $201. That would be a nice increase from the current share price of $174, a $25 increase, which is more than 10%. And I think investors would be reasonably happy with that kind of return on investment. However, I think the more likely scenario is that Lululemon's forward PE multiple increases. Right now, it's trading at a forward PE of 14.12, which we saw from the chart from Fiscal.ai is the lowest that this company has traded for, according to this valuation metric, going all the way back to January of 2023. This stock has never traded at a valuation this low. This is a premium business, a business that outperforms even Nike on some of the critically important financial metrics like gross profit margin, operating profit margin, revenue growth, and others. And so this business usually trades at a premium valuation, but this year that premium has gone down primarily due to a few factors. Number one, Lululemon's revenue growth rate in the United States slowed to the low single digits, which hasn't happened in its history. Secondly, the impact of trade barriers and how the higher cost of importing goods will hurt Lululemon's ability to operate its business. Those two factors are driving down Lululemon stock, and I believe, and I think it's reasonable to assume, that Lululemon will get a handle on this situation by the end of next year. So tariffs are usually a one-off increase in cost, and companies' management teams can find ways to mitigate those increases, especially if those increases become less volatile, right? One of the bigger challenges in 2025 for businesses hasn't just been the increase in tariffs, but it's been the volatility, right? Because it's up by 25% one day, then it was down by 15%, then it was up to 50%, then down. So that was more difficult to manage than just a straight out 15%, 25%, or 50% increase in cost. The volatility makes it more difficult. Additionally, the exceptions, the removals, the one-off deals with certain companies and no deals with other companies, that also added uncertainty. So it was all those other factors that were creating additional uncertainty for companies importing goods to the United States or sending goods to the United States. And so a lot of that has eased in recent weeks, which I was happy to see. There hasn't been very much news surrounding tariffs. There haven't been increases and decreases. It's been more stable, which gives businesses time and numbers to make decisions. And I believe Lululemon, being a company that's been effective at decision making in recent years, will do a reasonable job adjusting to these changes in circumstances relative to its competition, because everyone is facing the same thing. It's not just Lululemon. So if its forward PE multiple increases as I expect it will, if it goes up to 17 and the earnings per share remains at 14.23, then the stock price could rise to $242 a share, and that would be a very nice increase to be sure. If the forward PE multiple rises to 19, then the share price could increase to $270 per share. If the forward PE multiple increases to 22, which is not an unreasonable thing to expect, then the share price could increase to $313 per share. Now, I will make a note here that just because I haven't modeled a scenario where the forward PE multiple decreases or the stock price decreases, doesn't mean that there isn't the probability that will happen. It's just that I don't think that's one of the more likely scenarios. That's why I haven't modeled it here. What I've modeled is the four most likely scenarios that I think will happen with Lululemon stock next year. There are additional scenarios where the share price could fall further. For instance, if the US economy and the worldwide economy goes into a recession as a result of some of these increasing trade barriers, causing a decrease in economic activity, decrease in consumer spending, decrease in manufacturing jobs, decrease in overall purchasing from consumers worldwide, then that could create a significant headwind for Lululemon. Lululemon is a more cyclical stock, meaning that when the economy slows down, Lululemon's business slows down faster than the economy slows down, and the opposite is also true. When the economy is growing, Lululemon's business is growing faster than the economy is growing. And the company sells premium products at elevated prices that are not necessities. These are purchases people make with disposable income after they've already spent money on their necessities. So if people feel like they don't have enough money left over to spend on these types of non-necessary items, then Lululemon's business could suffer and the stock price could fall. But I don't see that as being the most likely scenario. So all that being said, where do I think Lululemon stock price ends by the end of 2026? Well, I think the share price is going to increase. I think it will increase to between $225 per share and $250 per share, giving investors a nice return on investment for Lululemon stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.